to get more analysis from Michael Klibaner, Head of Research for China at Jones Lang LaSalle. Michael, thank you very much indeed for joining us. First, I'd just like to get your view as to where we are going right now as far as these house prices are going. 2.2% up year on year. Well, that's less than inflation, isn't it? So maybe the medicine's working.
Indeed. These are quite modest numbers for Shanghai and Beijing and very much in line with our own proprietary data on price movements. I think we've seen that the implementation of home purchase restrictions has been most strictly enforced in Shanghai and Beijing, so it's not surprising that you see these kinds of numbers. I think, in fact, in Beijing we'll start to see prices come down. In fact, our own data at the high end of the market indicates that they already are starting to come down in Beijing.
Michael, that's not something actually authorities want. They want just some stabilization, don't they, at the end of the day?
We would agree with that. Our view has been for quite some time that the central government's primary intention is to flatten prices out and keep them from rising faster than incomes. And in fact, when you look at what most of the mayors in China have stated publicly about their own targets for their city, most of these mayors said that they would try to prevent prices from rising faster than GDP or faster than income growth or faster than 10%. So we believe that the government's intention is not to drive prices lower. But with that said, Beijing was one of the best performing cities in China in 2009 and the first half of 2010. So a modest give back is certainly within the range of possibilities.
All right, what is the biggest concern right now? I mean, we've got these tightening credit conditions. You know, if we do see a fallback in transaction volumes, a drastic, does that necessarily translate into lower prices?
It doesn't. But at the moment, we find that most of the large developers are quite optimistic, and in fact, most of them have been taking market share this year, even with these home price restrictions. And another way of saying that is that the marginal, smaller, kind of local developers are being disproportionately affected by some of the liquidity tightening that we've seen also. So the large developers are doing relatively well in this market and are relatively optimistic looking ahead. You have to keep in mind as well, last year housing starts were up 40%. So if home sales, transaction volumes are only up 22% this year, you know, we're still running a little bit behind in that inventories are building at the moment.
Yeah, some people, Michael, here are claiming that there could well be a price war. You know, do you go along with that thinking?
Well, there are certainly developers that have historically been willing to trade margin for volume. And this type of very tight environment is one that favors those kinds of developers. They're usually the first to act in terms of discounting. What we're seeing at the luxury and the high end of the market, which is what we track most closely with our own on-the-ground people, is that we're seeing slight price discounts. Also, you're seeing more value being provided, so better fit-outs, higher quality furnishings, those sorts of things to try to create value. But at the end of the day, the policies that we see most effective are the ones around purchase restrictions. So if you own two homes in about 36 cities, you're forbidden from buying an additional unit as a household. And those measures have really impacted the upper end of the market because we're seeing relatively strict implementation of those policies in many of the cities in which they're being applied. So to see the State Council now talking about extending some of these types of home purchase restrictions to more Tier 2 and Tier 3 cities, we think will certainly have an impact on not only the sales rates but also on the price action because in our view we've seen that these policies, these particular policies, have been relatively effective.
Thanks, Michael. Michael Klibaner there from Jones Lang LaSalle, just talking about these home price figures that's coming out of China.